Now we're going to take a look at the second step in closing entries. In the second step, we close all of our expense accounts because our expense accounts are also our temporary accounts. So it says to assume that the debit balances in the ending of the accounting period, rent expense has $1,400, wages expense $1,100, and $500 in other expenses. So we have three separate expense accounts, and we're required to prepare the closing entries. And also the accounting period ends on December 31st. So keep in mind all closing entries are done on the last day of the accounting period, and this one happens to be December 31st, so that is already placed here. Now, since our expense accounts all have a debit balance, in order to make them zero, we need to decrease them for the balance that they have in there, so we're going to credit all of their accounts. So we're going to credit all of our expense accounts. I'm going to do that first. We're going to credit rent expense, and rent expense has $1,400. And then we're going to credit wages expense, and wages expense has $1,100. And then we're going to credit other expenses in the amount of $500. So the total of all of this is going to go to our other new temporary account income summary. So remember, the purpose of income summary is just that. It's going to summarize our income. In step 1, we put the amount of our revenue in there. Now here in step 2, we're putting the total amount of our expenses in there, which is $3,000. So what happens at this point after steps 1 and steps 2, the balance in the income summary account represents the difference between our revenues and expenses, which you have learned is net income. Unless your expenses are greater, then it's a net loss. So here's the journal entry. After we credit all of our expense accounts, they now become zero. They're temporary, they're closed, and our income summary now has a balance in it based on the amount of revenue and the amount of expenses.